Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Kinahan, chief market strategist at TD Ameritrade, to discuss retail investor trading trends and election 2020 impact to the market. JJ, what a difference a month makes, that's for sure. And let's start with the latest investor movement index reading, or the IMX, in which each month TD Ameritrade pulls a sample from its client base of more than 13 million funded accounts, which includes all accounts that completed a trade in the past month, to get a sense of how retail investors are approaching the market. And JJ, we actually saw a slight decrease in October. Not too much of a surprise, though.
No, it's not. And first of all, thanks for having me, Jill. Always appreciate being on with you. And yeah, a little bit of a decrease. And again, not surprising, as we saw volumes in the market overall start to decrease a little bit as we went into the election. People a little bit unsure, let's face it, of what they should do. I found it interesting that two of the top stocks people went to last month being Apple, which is the #1 held stock at our firm, and AT&T. They had some good earnings. They pay the attractive dividend. You get the nice yield there. So I found that interesting. So when people are always looking at, well, did clients take a shot, so to speak, last month? And they did take a little bit of one in NEO, which has been a rocket ship. And the other one I found interesting, DraftKings. Why DraftKings? Because college football started back in earnest in October. You had Big Ten back, Pac-10 saying they're coming back, Mid-America, all the conferences just fell in order, so to speak. And so now there is more opportunity for DraftKings overall. So I found that interesting. And then the last thing, Jill, you and I always like to talk about millennials and what they did. The millennial clients bought the cruise lines last month. Carnival Cruise Lines, Royal Caribbean, much more so than did our more traditional population, if you will.
Yeah, that kind of makes sense. I would imagine millennials, being a bit younger, don't have as much of the travel concerns as a traditional population. That was fortuitous timing for them if they held it a bit. I mean, look at what's happened today with the positive vaccination news and what travel and leisure stocks are doing. So if they ended up holding on that side, that was a fantastic trade for them. But on the flip side, and I thought this was interesting going through my notes, that Moderna was actually a sell. And if you're buying leisure stocks, MGM was a sell.
Yeah, absolutely. So Moderna, the stock that was the 10th largest buy was actually Pfizer, but Moderna was a big sell. Part of it, I think, being, they came down pretty significantly from their 52-week highs, almost 50% off that, started to rally back pretty well in October. And I think many people were like, you know what, I'm just taking this risk off the table. If I got money back, or if I made some money from where I bought them earlier this spring or summer, I'm going to sell that out. To relate the buy of Carnival, let's talk about the other side of that in fairness. They were sellers of the airlines, particularly, actually, Jill, Delta Airlines they sold. And that's one that you and I have talked about before on the other side of the ledger, buying a little bit earlier this summer. So it is kind of funny. You saw that maybe you could say a rotation from Moderna to Pfizer, from Delta Airlines down to Carnival Cruise Lines. So again, related stocks, but yet people rolling out of one, so to speak, into the other.
Yeah, I'm really going to be curious to see in December when we get November's IMX reading, just to see how they follow through with it, particularly with the action that we're seeing in today's market. Because JJ, I understand that with the physical election out of the way, that's one piece of uncertainty removed from it. We got a significant piece of vaccination news that was positive today out of Pfizer, and there's some others that are expected. But I think the move over last week, and particularly today, the velocity of it to the upside was, we've essentially round-tripped a good part of the volatility that we saw this year.
We absolutely did, Jill, but I thought it was very interesting on the close. One of the things we were talking to clients all day about was, don't be crazy. This is fantastic news, but it's still a plan. And we don't have tactical explanations of how this is going to happen. How are people going to get the vaccination? Who's going to get it? When are they going to get it? So again, it's great to see progress here, but I think you have to be a little bit careful. And that goes both ways, by the way. If you were somebody who bought, the stay-at-home stocks, if you will, the Zooms, the Pelotons of the world, you saw them get beaten up today. I would expect that we're going to continue to see volatility at least through year end on this whole subject. As you know, these are, first of all, moves like this in the years you've been covering, are rarely one-day events. It's usually a couple of weeks. And second of all, coming into the holidays, coming into year end, I would expect that, as people want to gather more, et cetera, the COVID cases are going to continue to spike and wane. And with that, so is the news on this vaccination.
Right, and I would agree with you there, JJ. Just because we got the vaccination news doesn't mean that it's available for mass scale. People are taking it. You still have a couple of quarters of this to work through. And then even if you look at it beyond that, what we've learned operating in a virtual environment, whether that's a hybrid role going forward, is Zoom, for example, I don't think that's going anywhere. If you've made that purchase with your Peloton, I don't think that's going anywhere, especially if people start to a couple days at home, a couple days in the office. But I mean, even if we look at Zoom and isolate that, look at what we've been able to do this year with IPOs and managing the roadshow. It's become a more efficient process. You have more investors that are able to come to the table because it democratizes that roadshow structure. So even if you look at things like that or meetings, do you necessarily have to go to a client once a month when it could potentially be a quarterly review? I think the experience will improve with these virtual platforms, but I don't think they're going to go away.
Well, you and I are a perfect case in it right now, talking to each other, Jill. How many times do we get together at the Nasdaq doing this? And it's still a good experience. That being said, I think the one area you have to be careful of, though, when you look at that, I agree with everything you're saying. How does that affect business travel, particularly international business travel? As people say, well, you know what, maybe I can do some of these. If I used to go once a quarter, maybe I now go once a year and do the other 3 on Zoom. I would expect that the biggest area that's going to be influenced going forward is going to be business travel. Companies would love to cut some of that budget. And so that's why I think with the airlines and you have to, and hotels, you have to have a little trepidation even with this good news.
Yeah, that's a great point. JJ, as always, thanks for joining us on Trade Talks.
Always a pleasure. Thank you, Jill.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.